What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get 2 free stocks, make sure you check out my link below. Hey, I'm Sain, and if you're new here, I make videos on personal finance and how to invest and build wealth through the stock market. I started this Robinhood challenge for 2 reasons. Number 1, I wanted to simplify investing for those that wanted to invest but didn't quite know how. And number 2, I wanted to show you guys in real time the companies that I invest in to grow my portfolio from $0 to 10K and then eventually from 10K to 100K. So feel free to join me on the journey by grabbing some free stock using my link below, or sit back and watch. Either way, I appreciate it. Today's video is about when to take profits. Guys, we have been getting our positions established in a lot of different stocks, and so as a responsible person, man, I think it's important that I talk to you guys about when you guys need to start taking profits in some of these positions, what we need to hold on to, so on and so forth. So without further ado, guys, we're going to take a look at my portfolio today, and then we're going to hop right into it. Okay, guys, as you can see, my portfolio is currently sitting at $48,734.81 on the day, almost up 1%. On the week, we are up over a little over 1%. On the month, we are up over 6%. If I take you guys 3 months out, we are a little bit up over 15%. If we go 1 year out, even though I haven't had this account 1 year yet, we are a little bit up over 17%. And if we go out all time, same thing, guys, we are up over 17%. Hey, if you're new here, I started this account in January with $0. Each and every day I come on here to walk you guys through how to properly build and grow your portfolio. Today, guys, we're going to talk about when to take profits. And so I'm going to take you guys through a variety of stocks that you all should be holding as a result to rocking with me on this channel. First one we're going to be looking at is ticker symbol JMIA, otherwise known as Jamia. It is currently sitting at $10.96. You guys already know what price point that I talked to you guys about getting this stock at. It has now since dropped below that price point, and we're sitting at $10. If you haven't already, this is a position that I need you guys to consider taking profits in. If you can get back to break even or even a small profit, I need you guys to strongly consider getting out of this for right now, possibly going back to it down the road, but for right now, take profits and move on. Next up is ticker symbol MFA. MFA Financial is currently sitting at $2.71. Again, guys, we bought this in a $1 range. So if you have already doubled your money, again, consider getting out of this if this is not a long-term play for you. If this is a long-term play, hold it until the economy recovers. You will know when the economy recovers because the bank stocks, Chase, Wells Fargo, Bank of America, those stocks will start to recover, and this will as well. So if you want to make more of a profit, continue to hold it. But if you need to get out right now and take profits because you should have already doubled your money in this, then feel free to do so. Next up, we have Afria, ticker symbol APHA, currently sitting at $4.55. Guys, if you holding this, you should have your 125 shares of this as well. Again, you guys have the opportunity to really see this one go up to the $6, $8 range. However, if you have already eaten off of this, feel free to peel a little bit off the top. It's okay. Nobody ever got mad at anybody for taking a small profit, okay? So as new investors, I need you guys to understand it's okay. I'm gonna talk to you about the taxes that may come along, but one thing I want you guys to know, 2 things when it comes to taxes. This level of money is not so substantial where taxes are going to be as if we were trading billions and billions of dollars, okay? That's 1. And 2, I'm a long-term investor, so a lot of times taxes don't even kick in for myself. And so for some of you guys that hold your stocks over 1 year as well, you won't have to worry about taxes as much. I want to add that to the discussion around taxes. I'll teach you guys taxes, but it's important you guys know the whole approach to taxes and when they apply and when they don't. Next up, guys, is Plug Power. Now, you guys know we've had this at $5. We had this at $7. It is currently sitting at $13 right now. We have ate really well off of this. You guys already know when they sleep, we eat. Very few people was talking about this stock, but it don't matter. We were on this channel, and so again, this was one of our home run stocks. Feel free, even though I am high and long on Plug, but feel free to peel some off the top. This one has room to grow for years to come, especially with the EV industry taking the world by storm. However, if you guys need to, it's okay to take profits. All right, so listen, go ahead, feel free to hold a few shares. You guys already know we buy 125 shares because when we take profits, we can sell the 100, eat off of that, and hold the 25. All right, so that's just a reminder for why we do what we do on this channel. Last but not least, we have CleanSpark. Okay, it is currently sitting at $12.05. A lot of you have ate well off of this, and I'm very, very happy for most of you guys. Listen, it's okay as well to peel some, to trim some off the top of this as well. We bought this low. It is sitting above 12 right now. It was higher than this throughout the day. So listen, guys, the rule of thumb is this: if you are up 20% in a stock, that is extremely good. That's always like your first kind of benchmark to start taking profits. Okay, those of you that I know that are up 50%, 75%, 90%, and 100% or more, then you guys already know we're just holding and we're playing with house money at this point, because now the shares we own has already made our money back, and now if you peel something off the top, you just really working with the money you earned off the stock already. That's how we continue to grow our money, guys. And so listen, it's an okay thing to do. You do have tax ramifications that you must be mindful of. However, I don't want you to get so caught up in that you don't get out of positions the right way and take profits and trim your portfolio when you need to. Okay, again, it's the trillionaires and billionaires, the Elon Musk of the world, the Jeff Bezos of the world, those people, Warren Buffett, when they make trades, those are the ones that's paying quadrillion dollars in taxes. Okay, at this new beginner level with some of your smaller portfolios, the taxes will be very minimum for a lot of you. And so I want you guys to at least know that, okay? But be prepared, get in the habit of being responsible physically and financially with your money, okay? And with these earnings. Listen, guys, up next, we have our word of the day, and our word of the day is volatility. Hey guys, I want to talk to you about this because you need to know volatility moves in both directions. It goes up and down. A lot of times we talk about volatility and it's always about the stock going down or it's doing something turbulent, okay? However, it's volatile as well when it goes up. Tesla, for instance, if you guys know and rock with me on the channel, we bought Tesla at $300. Tesla shot up to $1,700. Today it's over $1,900. That's called volatility as well, okay? And so just like it can shoot up like that, it can come down just as hard, okay? And so again, brace yourself. Again, like I talk about, don't be overly emotional. You guys have to maintain your composure. You guys have to stay cool, calm, and collected through investing, because volatility will sometimes hit some of the stocks we have, especially the ones we talk about that's in our growth stock category, okay? And so guys, volatility is a natural part of the stock market. Stocks will go up and down. I got to keep reiterating that. They will go up and down. Don't panic when that happens. Just know that that's a natural course. Just like you get up every morning, and I hope you guys brush your teeth and wash your face and hop in the shower. That's the same thing with the stock market. It's going to go up, it's going to go down, it's going to go up, it's going to go down. However, it always goes up, and that's how we always take solace in knowing that we're going to always make money in the stock market. Listen, guys, up next we have our question of the day, and our question of the day comes from Lisa Marie. She says, wow, I really like what you said about reviewing your portfolio and basically dumping the stocks that are lagging. I bought into United Airlines when the market was dying during the COVID crash. I made some big mistakes and it cost me huge. However, I finally dumped it and bought as much Tesla stock as I could, and I'm on my way back. Now, if I only could possibly understand options trading, I was going to try to copy exactly what you did on your call and puts, but I just don't understand it. Keep it coming. Hey, Lisa, great comment. Again, I appreciate you for sending this in. Listen, guys, she hit on something, and that's why I wanted to double back and emphasize her point even more. Like I already told you, it is okay, man, to get out of a good stock to invest in a great stock. I don't ever want you guys holding on too long to stocks that are just staying stagnant, moving sideways, or losing you money. Again, it's kind of like a relationship. You might have to get a divorce from some of these stocks. It's not till death do us part. We are in the money-making business. I want to see your portfolio grow. I'm going to help your portfolio grow. I'm going to help all you guys build wealth. And as a result, sometimes that requires us to get rid of stocks that at one time may have been doing good for us, or we at one time may have had high hopes for, but right now in this current landscape, it might not be doing anything for us. And so as a result, we have to be physically responsible. And so that might require us to get rid of a stock altogether, put it on the back burner for now and come back to it in a different time period. And so in her case, United Airlines was one. And again, Carnival Cruise for me was one. You guys know I own Wells Fargo, and I had to get rid of that when they cut the dividend. So depending on your strategy, depending on why you hold a stock, all those things factor into when it's time to get rid of a stock. And so in this particular case, Lisa, I want to send some love your way. Great job. There's never anything wrong with getting out of a stock that's kind of lagging behind and getting into one that's running to the moon. And so Tesla is one of those, Apple is one of those, Microsoft is one of those, Facebook, and so on and so forth. So guys, continue to listen and make moves strategic to your investment strategy if you need to. Hey guys, I hope that was helpful. If you have comments, leave them below. I'll grab them and add them to my next video. Listen, I make videos like this every week, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you grab some free stock using my link below, and I'll see you guys in the next one.